When you look at the beatdown in the packaged food stocks, it's clear that this rotation out of the pantry plays and into a lot of stocks like the airlines and restaurants of lower quality, by the way, has begun. Take J.M. Smucker's, the maker of Folgers coffee, Jif peanut butter, Smucker's jelly, and those delicious Uncrustables PB&J sandwiches that are so popular, along with several pet foods and snack brands. This morning, Smucker reported some fantastic results for the 3 months ending in April. Just a strong top and bottom line beat. Clean. However, when management issued guidance for their new fiscal year, those numbers came in much lower than Wall Street was expecting. It was the kind of forecast that made you wonder if this company's best days were somehow behind it. No wonder the stock got hammered, sinking nearly 5% today on great numbers. Now, at these levels, the stock sports a 3.2% yield, and it's far from expensive. But can investors get excited about this one in a post-COVID shelter-at-home world? Let's take a close look with Mark Smucker. He's the president and CEO of J.M. Smucker Company. Get a better read on the quarter and his company's prospects. Mr. Smucker, welcome to Mad Money.
Jim, thank you for having me.
All right, so Mark, I went over all the things that went right this quarter, and then I went over your guidance, and I have to say that it made me feel that your brands may not have any growth or no organic growth, and yet that seems almost impossible given the momentum you have.
Well, you're right. So first of all, our brands will grow in this coming year. As we think about and looking through the year, our core business is strong. You're right. We had a fantastic quarter, but the guidance that we gave was meant to help explain to our investors the real impact of COVID. But if you think about some of the key things that have gone on, number one, 1 million new households on our coffee brand, 3/4 of which are on Folgers. Uncrustables, one of your favorite products, grew 50% in the quarter. And actually, in the quarter, we sold more Jif peanut butter than we ever have. And so consumers are rediscovering, in many cases, some of these brands that maybe over the past couple of years, they've lost a connection to. It also shows that these bigger brands are still trusted, and the categories in which we operate are resilient. So if you think about what will grow next year, it's Uncrustables, it's Dunkin', it's Cafe Bustelo, Meow Mix, Milk-Bone. All of those brands we're expecting to grow.
I do think also that you were, and I love conservatism because I really want people to underpromise, but it was almost as if you said that our service business is going to be down, but it won't be made up by our at-home. Now, that's actually a bad description because what I think is really going to happen is that the work-at-home people are going to be eating at home. And we're not going to put all those people back in the offices because it turns out to be expensive. Those will be peanut butter and jelly and Uncrustable eaters, won't they?
Yes, and that is the #1 lunch sandwich in the United States. If I could just break down in a very simple way our guidance and what it reflects. First of all, the huge beat in Q4, roughly $170 million, which we will be lapping, obviously, a year from now. And that is a very difficult comp. And then our away from home business, which has actually been incredibly strong leading into the COVID situation, has been gaining share in all of its segments, which are Uncrustables, coffee, which you see in both offices and in large venues, hotels, and so forth, as well as our tabletop branded. So the little jam and jelly that you find at any one of our retail, restaurants around the country, that business is going to be down significantly.
Okay.
And because it has a very high asset base, that headwind we cannot totally offset with the growth in the other businesses.
That's fair. That's fair. One thing I thought that was left out, but maybe it's because I'm enamored of them and others aren't, but I sure hope that changes. You guys gave me some, a big box of the Sahale snacks. I took them home to my vegan daughter and vegetarian daughter, and they thought I had come up with the great one. I didn't tell them they were Smuckers. I said they were owned by some small merchant that's starting to make a comeback. And they were like, wow, this is the candy, this is the snack we want. Never mentioned in the conference call? I mean, didn't somebody sample this thing?
Well, it is a fantastic product, I will tell you. And actually, our stated strategy involves not only these big brands, but it also is about these smaller emerging brands, which Sahale is one of those. It is a boutique brand. It was founded in Seattle by two entrepreneurs. We acquired it several years ago, and we have just gotten to a place now where it's really starting to take off. And you can find it in a lot of places, one of which is airports, which none of us are going to right now.
All right.
But it has grown, and it is a fantastic product, and it's healthy.
Uncrustables we have to talk about, because when you get a 50% growth, that is a breakout in the food business. How did this happen, and is this the beginning of the trajectory?
Uncrustables, Jim, is a brand that we acquired way back around the turn of the millennium, around 2000. It was a $1 million business. Today, it's north of $350 million. It took us a long time to figure out how to make that product. We just opened a new plant in Colorado, which we are still expanding. And we are now in a place where we truly can supply the market with that fantastic product. And I might add as well that we have a lot of innovation. So if you look at this past year that we just ended, $360 million of our sales came from new products. And coming into this year, we have a number of new products, whether it's in pet food with nutrition and Milk-Bone treats. And then we have a new Jif squeeze product that is fantastic and really delivers. So really combining those high growth brands like Uncrustables with some of our broader innovation is going to be a key focus for us here in fiscal 21.
All right, last question. You probably have because of your lunch food, better call than most. What percentage of the people that have scattered around the earth because of COVID are not going to the central office, do you think will go back? And how many do you think will stay at home?
You know, what we have assumed going forward over these next 12 months is a slow, gradual return to normal. In our own case, we're not bringing people back to the office yet. We have to be respectful of our employees. They've been working so hard over these past few months and really risen to the occasion and shown that it's as a key player in the food industry, it really is our time to shine and show that we have an obligation to meet the needs of our consumers. But our assumptions are that it will be a relatively slow, at least over a 12-month period, until we get back to a much more normal lifestyle.
All right, fair enough. Well, there's a lot of time for people to sample more Folgers or Uncrustables and know how good they are. Thank you so much, Mark Smucker, President and CEO of J.M. Smucker. Great to see you, sir.
Thanks so much, Jim.
Okay, Mad Money will be back after the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.